Here's the thing you need to understand. The market always goes up. Always. Understand, this is not to say it's a smooth ride. It's not. It is often a wild and rocky road. It's not easy. That's why you got to be tough. Because the market always, and I mean always, goes up. Not each year, not each month, not each week, and certainly not each day, but relentlessly up. J.L. Collins, author of the famous stock series that later became one of the best personal finance books ever written, The Simple Path to Wealth, a true FI legend. This is J.L. Collins on why the stock market always goes up. Take a look at this chart, which shows the historical relentless rise of the Dow Jones Industrial Average from 1900. Now look at this one, showing the UK FTSE All-Share Index inflation-adjusted returns from 1694 to 2008. If we looked at graphs of the S&P 500 or a global index such as the FTSE All-Cap Index, we would see similar results. It's been a roller coaster ride and there has been plenty of drops along the way, but over the long term, the stock market has been a great place to be as a patient long-term buy and hold investor. First, let's look at what exactly makes up an index. Let's use the FTSE Global All-Cap Index as an example. According to Vanguard, the FTSE Global All-Cap Index is comprised of large, mid-sized and small company shares in developed and emerging markets around the world. It's basically a group of most of the publicly traded companies in the world and can be invested in simply by a fund designed to track this index like the Vanguard FTSE Global All-Cap Index Fund. The index fund is the single best tool we have for participating in the progress of human endeavour and the resulting global market's relentless climb. But why exactly does it go up? Jim's two basic reasons are as follows. Number one, the market is self-cleansing. Most of the companies around today didn't exist hundreds of years ago. Furthermore, many of the early companies have come and gone or merged into others over time. Some companies will struggle and die. The worst possible performance one stock can deliver is to lose 100% of its value and cease to exist. This will result in it dropping out of the index. But as the stars of the past fade, new companies grow and prosper and they replace them. The top performers have no limit on their upside and can rise to unprecedented heights. Therefore, the market is self-cleansing. Number two, owning stocks is owning a part of living, dynamic companies, each striving to succeed. When you own an index fund, such as the FTSE Global All-Cap, you own a tiny piece of virtually every publicly traded company in the world, and over time, technological progress, innovation, and increased productivity should lead to higher future profits of these companies. When you invest in a stock market for the long run, you are making a bet on the progress of humanity. In the words of J.L. Collins, when you own a stock, you own a piece of a business. These are companies filled with people working relentlessly to expand and serve their customer base. They are competing in an unforgiving environment that rewards those who can make it happen and discards those who can't. It is this intense dynamic that makes stocks and the companies they represent the most powerful and successful investment class in history.